When you buy and sell a stock today, speculate with crypto, or pull out your credit card, you're actually using an invention from a city built below sea level 400 years ago. Wall Street didn't exist. London's financial center didn't exist, but Amsterdam did, and there, a small group of merchants discovered something that would change the world forever. Trust could be sold. Money doesn't speak. History does. And Amsterdam's story is the story of how money learned to speak. In the early 1600s, Amsterdam was an anomaly. No king, no gold mines, not Spain's army or France's land. But they had something, the incentive to survive. The Dutch didn't grow by conquering land, but by conquering distance. They fought the sea, dug canals, mapped oceans. Every ship didn't just carry goods, it carried promises, insurance policies, letters of credit, contracts. Promises on paper weighed as much as gold. Why? Because the system rewarded it. Monarchies relied on taxes, demanded obedience. But trade relied on trust, and trust could travel much further than obedience. And this is how capitalism began, not as a grand ideology, but as a practical solution. How do you finance risk that no single person can bear? Dutch merchants created a revolution. Verenigde Oostindische Compagnie, the Dutch East India Company, the world's first public company. Before, trade worked like this. A few investors pooled money, sent a ship. If the ship returned, profits were queried. If it sank, everyone lost everything. Sailing was gambling. But the VOC changed the rules. It didn't close after a single voyage. It created permanent capital. Investors bought shares, pieces of ownership, and now they could sell those shares to someone else. For the first time, wealth separated from labor. You could make money standing in Amsterdam without sailing to Asia. The company raised the equivalent of billions of dollars. It minted money, built armies, negotiated with kings. But the real innovation wasn't the company. It was the market that grew around it. Those shares, under small pieces of ownership, began to trade. Every day, investors gathered outside the Amsterdam exchange, buying and selling. Prices rose and fell with rumors, profits, fear, chaos, invention. The birth of the modern stock market. In the shadow of a church, the modern world was being priced in real time. Money doesn't speak, history does. And in Amsterdam, for the first time, price began to speak faster than history. The Dutch had no word for capitalism, they just called it trade. But the logic was already there. Abstract ownership, transferable value, the constant balance between greed and trust. In 1609, Amsterdam pulled off another revolution, the Amsterdam Bank, the first true central bank. Before, Europe was in monetary chaos. Every city minted its own coins, all clipped, shaved, counterfeit. The Amsterdam Bank ended this chaos. It created a single, reliable unit of account. You deposited your gold, the bank weighed and verified it, and gave you credit in the ledger, bank money. And everyone trusted it more than gold itself. This idea, that trust could replace metal, would one day power the global economy. The Dutch didn't just trade goods, they traded risk. They invented insurance for voyages, futures for cargo, options for prices. In Amsterdam's taverns, speculation became a profession. For the first time, people were getting rich from price movements, not from the goods themselves, and for the first time they were losing everything from volatility. In the 1630s, that delusion reached its peak. Tulips. Imported from the Ottomans, tulips became status symbols for the Dutch elite. Rare bulbs sold for fortunes. Contracts for bulbs not yet bloomed traded like shares. One bulb could equal a canal house. People weren't buying flowers. They were buying the promise that tomorrow someone would pay more. Then one day, someone didn't pay. The market collapsed. Fortunes evaporated. Amsterdam, the city that invented the modern economy, also invented the modern crash. Money doesn't speak. History does. And for the first time, history was saying, markets run on emotion, not mathematics. The Dutch built the system, but others scaled it. In 1694, England copied the Dutch strategy almost line by line, founded the Bank of England, issued government bonds, and birthed the concept of a national bond market. The English called it innovation. The Dutch called it imitation. But with that imitation, the world's next financial empire was born. In the 18th century, London became the new Amsterdam. Capitalism was now an imperial power. Amsterdam stagnated because of the system that made it rich. Capital flowed not into new ventures, but into financial instruments, loans, pensions, speculative assets. Dutch bankers were lending to England, France, young America, but not investing in their own country. Amsterdam was now a capital living on interest, not innovation. By the end of the 18th century, its power was already fading. Napoleon invaded. The Dutch Republic fell. But the invention, capitalism, survived, even thrived. Because when you invent a system based on belief, you don't need to physically survive. You just need others to keep believing. When Amsterdam lost its empire, London absorbed its methods. When London declined, New York took them over. The Wall Street Exchange was a direct descendant of the one on the Damrak, and the mistakes repeated too. The Tulip bubble was just the first draft. 1720 South Sea, bubble, 1929, Great Depression, 2000 dot-com crash, 2008, housing crisis, 2022, crypto collapse. Different assets, same story. Exaggeration beats reality. Leverage beats caution. Optimism beats truth. And every crash doesn't end capitalism. It refines it. The system isn't designed to prevent bubbles, but to survive them. When the Dutch turned trade into culture, they also rewired morality. In medieval Europe, profit was sin, interest was crime, speculation was heresy. The Dutch changed that. They made profit patriotic. Thrift and calculation became virtues. Protestant ethics merged with the capitalist spirit. Salvation began to be measured by solvency. And from here, the modern idea of success was born. Success not as survival, but as accumulation. Amsterdam's story isn't just history. It's prophecy. London, New York, Hong Kong. All followed the same arc. Innovation, expansion, speculation, stagnation. Every city believes it's smarter than the last. Each discovers it isn't. Today the waves have returned. Record global debt. Markets driven more by speculation than productivity. Digital currencies based purely on belief. The tools are new, but the story is the same. The system born to manage risk has become the greatest risk. Capitalism isn't a machine. It's a mirror. It reflects human ambition, fear, desire. Amsterdam was the city that first held up that mirror to the world. 4 centuries later, we're still looking into it, still chasing the same delusion, that we can master the tide without getting our feet wet. Money doesn't speak. History does. And history tells us this. Every empire built on trust eventually faces the same test. Can it still deserve it? Amsterdam was built in the mud of a small republic that refused to sink. It was born from necessity, powered by faith, sustained by belief in paper. It made the modern world possible, and it still reminds us. When the tide rises high enough, even the best walls eventually break. Old money.